Welcome out to Tackle Train's halftime report for February 14th of 2020. This is Coach Matt. I got two amazing coaches with me, and Coach Mark and Coach Breakout Coach Frank, and he's here to talk a little bit about some breakouts here today. I'm going to start with Mark. Mark, how you doing today, brother?
Listen, I went drinking last night, and I woke up, and my Advil bottle was empty.
Okay, so you went karaoke last night then?
I did. Went my Thursday night karaoke, and
what was your? Did you get a girlfriend the day before Valentine's Day?
Listen, no man that is single listen. If you do that, you just ain't very bright. You may not get
That's true. Coach Frank, how you doing today, brother?
Doing great. Thank you for having me. Always good to be here on Fridays, hanging out with the crew live and in person. Happy Valentine's Day, by the way, halftime crew.
Yes, happy Valentine's Day to all of you guys. Do you guys, Valentine's Day, I was talking to my daughter about this the other day. What's your favorite holiday and what's your least favorite holiday?
Mark? Yeah, let Mark have that one.
I like, listen, with my kids are little, Christmas is my favorite holiday. There's that excitement. I mean, I have a 9-year-old daughter, 10-year-old son. There's that natural excitement with kids that age around Christmas. So
just wait till they're teenagers. That would become your least favorite holiday.
Well, but right now, I know that's why I prefaced it. So I definitely go Christmas. And so I don't know about least favorite. Like,
it might be Valentine's Day. It might be. What about you, Frank? What's your favorite holiday? And Frank, you got a video today?
I don't have. I'm still in the process of getting the video going. You missed out on me becoming one with the machine. These last couple of the last couple of weeks, I've become one with the machine. I've got a webcam, I've got a computer, but if you think I can get them to work, and I tried hard at first. Now, the last couple of weeks, I've just kind of accepted that. Whatever. So I tried hard at first though. But I would have to say, I'm a 4th of July guy. If you have to give me a favorite, barbecue, summertime. Okay, that's my second favorite. My first favorite holiday is NFL Draft Day. That's my
should be a federal holiday. It really should. So should the day after the Super Bowl. But I'm going to say Thanksgiving, one for me, and then I'd say our nation's birthday, Independence Day, I would say would be a close second. I'm just not that big of a fan of Valentine's, but let's get into it. Mark, I want to start with you.
So have you gotten your wife a Valentine's gift?
Yeah, I'm gonna go get her some roses right after we get done.
Yeah, so.
I want to start with you. And obviously we've had some Corona news that's kind of hit the wire over the last couple of days. I want to start off with some of the headlines I read today, and then I'm going to just turn over the floor to you to kind of give the team an update on what you're seeing out there. Hong Kong tourism has declined by over 50%, ladies and gentlemen. Also, Singapore, one of the most important economic systems in the Asian Peninsula. Singapore warns of a recession, some of it due to the coronavirus. And just Mark, help us understand the data that we're getting out of China, because I mean they have just changed the way they've categorized some of this, and it's kind of been a little shocking, to be perfectly honest.
All right, let's talk about where there's no debate. Everybody agrees that this is going to affect global GDP. The magnitude, obviously nobody knows that, because that's going to be dependent on how widespread this gets. But everybody agrees at this point that this is going to be a big shock to the global GDP in 2020. That's just, everybody agrees that. That's just, already done. People agree with that. People are now almost universally agreeing that the magnitude of the virus has been bigger than we have anticipated. There's growing skepticism. We started the skepticism on China almost from the start, on the data. Can you trust the data? Well, that's now mainstream media outlets. Lots of people are starting to say, we don't even know how bad this is over in China. So people talk about recovered rates and total deaths and that. There is just growing skepticism that you can even slightly trust what the Chinese government is saying regarding this virus. You have increasingly negative headlines beyond death totals and amount of cases. So the narrative for the first couple weeks of the coronavirus has been an increase in the number of infected, the increase in the number of deaths. And that was kind of the narrative. That narrative is expanding. Like the CDC chairman, I believe, let me make sure I'm getting that right, but the CDC director today warned that the coronavirus could become widespread throughout the United States, probably beyond 2020.
Yeah, Mark, I heard it was not only 2020, but 2021. It's something that we might be seeing yearly.
I mean, the plain and simple fact is that because from a scientific point of view, there's so much we don't know about this virus, because we don't know that, we're just a few weeks in. It's not like we have years and years of data. This is like, it seems like we've been talking about this forever, and yet
it's only been 3 weeks.
From the scientists that what they do in their life don't have a handle on all of how this coronavirus works. And so you are now having individuals, and maybe the CDC director is being a doomsayer. I don't know. Once again, I'm not a scientist in this
I couldn't imagine the CDC director being a doomsayer, though.
I
could not imagine that.
No, but when you see headlines that, because right now market participants who I will go down with the ship saying are under pricing the risk of this, we have come to accept that this is, I think, as market participants, yes, this is going to affect GDP, but it's isolated to China with a few spot cases in other places. If the coronavirus actually spreads to other geographical regions and you start to see outbreaks on the level of China, don't even try to guess where this market drops to.
Well, at that point, you're not talking epidemic. You're talking
a pandemic.
Yeah, and that's a vastly different situation when you start to see the spread out to other, nations and states and so on and so forth. Obviously, it's a concern here, and in the back of your mind, it kind of messes with you a little bit. We constantly say that trade with your eyes and always follow the trend of the market. And right now, the market is. I agree with you, Mark, that the market is underpricing in the perception of how this could impact GDP and slowing growth from around the world. Mark, it was just a year ago that the Fed had to go to unprecedented levels to basically stave off a global recession because we were seeing global slowdowns just from a pure economic perspective. And now you throw into this massive concern around the coronavirus. Obviously, you and I agree that it's going to have a GDP impact from an economic perspective, where our hearts and our prayers go out to the human condition as well. But to me, you always have to follow the trend of the market. That's number one. But you always also have to be prepared about what can come down the road to impact price, to ensure that, if we do start to see volatility pick up, if we do start to see, the market slow down, if we do start to see in the S&P 500 double tops and double bottoms and reversal patterns, at that point, we obviously have to take a different perspective and, maybe adjust some of what we do. But until we start to see it in the market, don't you have to trust your eyes?
Well, how I've been approaching it and how I've been advocating to approach is that, all right, so you have your portfolio, you have your investments that you manage on a consistent basis, your long-term investments that maybe you do covered calls on. Keeping an eye out for those signals like you would in any other situation, whether it was a coronavirus or a trade war or anything else. Kind of managing that as you will. Then you got your cash flow strategies. You got a lot of your normal business. Where I think the coronavirus is impacting my decision making is in that speculative part of the portfolio, those directional plays that you might do. And it's not that you don't do directional plays in this environment, but cutting back the position size of those. The market's going to be here from now for the next 10, 20, 30 years, how long you're trading. There are times where it's easy. There's times when you don't have overarching narratives to the downside. But so not going crazy, not being over leveraged, you should never be irresponsible. like with your whole portfolio leveraged with naked puts on equities,
No,
for example.
Of course
But
not.
like the main message I have is like to be extra cautious of those type of things that maybe you normally do X amount of speculative bullish positions at any one time. Maybe cutting back the percentage of those, cutting back the position size when you have this really overarching bearish narrative in the face of a very bullish trend. You still want to take advantage of opportunities that arise. Just don't be greedy during them.
Yeah, that's really well said, Mark, because that's exactly the approach since we kind of saw that first spike that I've been a big fan of as well. You can't, because who knows when, and hey, let's face it, even if, you know, anything comes of it, right? I'm with you guys. I think it probably will, but is that next week? Is that 6 months from now?
Yeah.
Right? And I don't want to miss out because I think, right? You guys know me, I focus chart first and I try my best to live as close to a bubble as I can, right? When it comes to trying to, you know, put the news in on the shorter term time frames. Lowering the price or lowering your position size is a perfect way to do that. You're still trading what you're seeing. You're still taking advantage of the price action. And hey, you know, if we do get, I think we all are kind of mentally prepared that, hey, if we see a big red candle, you know, any given morning when we wake up, I don't know that that's all that surprising. We've seen some, you know, pretty, you know, short-term spikes in the after hours trading a few times when the market was a little bit scared on news. So I think that's just the right approach to take, you know, not sitting out, but taking a cautious approach, whether that's fewer trades or lower position sizes or both. You don't want to miss out on runs because you think, I guess, is at the end of the day, my philosophy.
And I'm hearing from both of you, and obviously I've been saying as well. I mean, caution is the word, right? Caution, cautious, conservative, scale back a little bit. Don't chase, you know, all of these things. And it kind of brings up a subject that I really do want to talk about. The utility sector, XLU, today hit an all-time high. And there's something that has been happening over the course of the last, you know, really honestly the last year, but specifically year to date. Year to date, the two best performing sectors in the market are obviously technology. Technology is just an absolute juggernaut, up about, you know, 8-9% year to date, with the NASDAQ really kind of leading the charge on the indexes. But, you know, Mark and Frank, utilities usually don't run in line with technology companies. And the utility sector right now, obviously the number one defensive sector out there in the marketplace, you know, the most boring sector in the marketplace, you know, typically, but utilities are running hot right now, on pace with not outperforming, but on pace with the technology sector, something I just have not seen, you know, very often in my career. What's your take on why utilities is the number two sector in the market, followed, you know, obviously by technology? I want to start with Coach Mark.
Listen, you had a nice technical breakout that occurred. Oh, what date was that? You know, right there.
15th of,
you know, so mid January.
I mean, January.
So you have a nice consolidating pattern. You know, this is very typical in all markets. Consolidates for a month, consolidates for two, consolidates. You get that breakout signal. This is why trading works. This is why trading works. And you get a nice pop. Now, it is really rare. Like that line is the 9 EMA.
Yeah.
My indicator of choice, the one I follow. It is really rare. Like extremely, like I don't know if it's ever happened, rare, for utilities to be above the 9 for this many trading sessions in a row.
Doesn't happen
often.
often.
Doesn't happen. You,
Right,
just don't see momentum like this.
Yeah, exactly. That's just what I was going to say. Utilities isn't historically a momentum area of the market. It can be a nice cash flow area. It can be a nice, you know, long-term trend. But you don't see short-term momentum like this in utilities, like ever. This ain't your grandpa's stock market anymore.
Apparently, utilities is a growth sector now.
Like exactly.
That might as well be Tesla's chart. You know, like I think it goes to a couple of things. I think one, it goes to a combination of yield, a yield instrument combined with a perceived safety. You know, so I think that is in play, but I don't think that explains it all. I think we are really in a transformative age with computers and price movement in a bubble type mentality. So back in 20 years ago when we had the dot-com bubble, computer algorithms were in their infant stages back then. They didn't play the role that they do now. I really think that today's stock market, with a bubble, no fear. I mean, my God, guys, the coronavirus has jumped from like 0 to 60,000 in a couple of weeks. People are talking even the theoretical possibility of a global pandemic, and the stock market does not give two craps about any of that. They just don't care.
Not yet though, because for the last 3 weeks, we've seen the narrative play out, and the narrative goes like this: China reports data, and the news media in the U.S. just reports that data as truth. And the narrative has been out of China that it was going to be contracting and they're going to be able to control it. And people in China are going to be going back to work in mid to late February. And, you know, we've seen that just play out where the Chinese data that gets responded, the U.S. media does not even question it. I mean, it was just the first time I saw a headline on like, I can't remember if it was Fox News or CNN. I can't remember which one I was looking at the time, but the headline was like, for the first time in like 3 weeks, questioning the data. And that was only after China came out and said they had made a mistake, and it jumped up 15,000 in 1 day from the fact that they were miscategorizing some of it. And that was the only time that I'd seen anybody outside of, you know, Twitterverse and social media, you know, start to question these types of things. You know, so I think that's been that narrative, and that narrative can be blown out of the water. But also, you know, Frank, talking about utilities, Frank, you know, is this something that you see utilities continue? And I mean, we just saw, you know, Mark point out the breakout that happened on January 15th, but just yesterday we broke out of a high base scenario. Once that 9 EMA did catch up to it, you know, you're breaking out of the all-time high. Is this something that you're looking at to take advantage of a little bit?
Oh, absolutely. And the thing is, at least from my point of view, this is, yeah, it's been a very good 6 weeks. You know, there's no disputing it. But for a while now, utilities have been, you know, bigger movers than they were when I started, at least started paying attention to utilities. I remember they used to trade, that XLU used to trade between like 33 and 36 forever. You know, and you look at that long-term trend. I mean, it's not the most exciting place generally. This is a little bit of a, you know, a little bit of spike in excitement, but
that's
it's not
utilities.
That's
This
utilities.
is Southern utilities. This is you don't see these utility companies doing this.
It's been an interesting place as of late, and the simple reality is it's really been strong in the face of just about everything, regardless of what the storyline of the market was any given point in time over the last year and a half. I mean, it's really been one of those areas when folks get scared, it goes up. When people are happy, you know, it goes up. You know, and so I'll continue to look at utilities from that point of view. That was an excellent little break. The biggest problem, you know, because I was watching yesterday as it was knocking on the door of that resistance, the biggest quote unquote problem from a trading perspective is you do have a lot of earnings in the utility stocks coming up in the next week or two. So it does, you know, kind of makes XOU kind of probably the vehicle to work with, but it's strong, and why not? And plus it does kind of have that backdrop too, you know, if the fear does pick up, sure, I would expect short term it would get hit, because when fear gets going, you guys know what happens there. But once it settles,
I honestly think everything you guys are talking about is accurate. I think there's three things going on right here. Number one, in a low interest rate environment and you're chasing yield, and you can only get, you know, 1.5% on a treasury note, or 1.67 on a 10-year note, or 1.85, whatever the numbers are, right? They're all less than 2%. If you can only get that, you're not even outpacing inflation at that point, right? In fact, there was a guy on Twitter I follow, a really good guy, Charlie Belo, or I can't remember exactly who it was. And he was talking about the average interest rate in the market versus what the rate of inflation was. There was like only one country in the world that had a positive interest rate that when you discount inflation, and the U.S. was not it. It was like 0.03%. And so if you buy a treasury note right now, you can't even with inflation being really, really low, you can't even outpace inflation right now in a U.S. treasury note. So in terms of that, if you're looking to, you know, get a little bit of a safety play, get paid a little bit of a higher dividend, the utility sector pays out an average of about 3% on the dividend. That's number one. Number two, in a low energy environment with what's happened with natural gas and now what's happening with crude oil and whatnot, revenues are most likely going to be going up for the utility sector. And number three, given the fact that what we are seeing around the world is concerning to us, even though we have obviously not seen it in the US marketplace yet, utility sector is a safe haven asset class, correct?
Right. Yeah, absolutely.
So,
So you do get the best of, both worlds. We get price appreciation, just like it's a tech, like I said, like it's a tech sector with these nice juicy dividends and that little bit of extra safety from the defensive. That's an easy sell.
No, I agree 100%. But again, I just come back to one simple reality. I don't think I've ever seen in my career, and again, maybe it has occurred, maybe it hasn't, but I don't remember it, when utilities and technology were running together.
Utilities don't high base either.
No, they don't.
Like you don't have like pops and then high base.
They'll pop and they'll consolidate for 2 months.
But you know what? I mean, if you do not know technical analysis, now we spend an insane amount of time teaching, preaching technical analysis at tackle trading. The powers of it, the ability of it to make you money in real life every day. Utilities, during this run up, this is technical analysis 101 a play. Technical analysis 101 a play.
I agree with you, Mark, but it's so hard when you're looking at the breakout, like, yeah, you would take a position in utilities, but to look at it from a momentum perspective, because that's what we're seeing here today.
Dude, computers no longer care.
Of it.
Everything is a potential momentum stock to computers.
That's
from
amazing.
This point on.
Kraft Heinz. I'll give you one that is not a momentum play right now, and that would be KHC here.
Oh, Lord have mercy.
KHC is not a momentum play. Now, I will remind you that Warren Buffett does own 27% of the outstanding shares in Kraft Heinz, and this is what Kraft Heinz has been doing for the last 3 years. And that's
a momentum play. It's just a momentum play to the other side.
Yeah, Kraft Heinz is now a momentum play to the downside. I do want to shift up the topic a little bit. I want to talk a little bit about crude oil here, Mark. Just today, and then once we get with crude oil, talk about the dollar a little bit. We'll get into some individual stock news. Obviously, we have some earnings with NVIDIA and Roku, Expedia, Facebook had some news out today, as well as some other companies that I want to get Frank's take on. He's called Breakout Frank for a reason. But in crude oil, Mark, one of the instruments you love investing in, bottom feeding in, and so on and so forth, we're obviously seeing a little bit of slowing down right around that $49.5 to $50 mark. I wouldn't exactly call that a reversal pattern, obviously, but you are seeing some slowing momentum to the downside. But the news I want to talk to you about today and how it might impact your analysis is the IEA, which is the International Energy Agency. They came out today and they slashed their forecast for 2020 by a whopping, and this is massive, 365,000 barrels a day in usage that should come down. And that's just fitting the narrative we've seen for the last couple of years, Mark, where demand has not been outpacing supply. And the only reason we've seen oil kind of hold up is slashing of the cuts through OPEC and so on and so forth. So we're talking about close to a 30% reduction in oil consumption. And that's where we're at right now. If that virus spreads, that number is going to be even worse from a global demand perspective from oil. What's your read on that? And does that news change your analysis?
Now listen, for years and years, there has not been a bigger oil bull at tackle trading than me. Like any downward price movement has met with a ferocious, I don't give a crap about your technical signals. We want to acquire at certain price levels. I've been a relentless bull. I believe in the thesis. And a couple of weeks ago, I changed my tune. For the first time, and I can't remember, it's been at least 4 years that I have had this general thesis in studying the OPEC's language. And
it was after 14 and 15, the oil war that OPEC started, I think.
And once they changed their language, I have my beliefs, and it's been pretty spot on. You get out to elevated prices, they turn up the pumps. That's when you let go of your positions. When it comes down, it's just been a nice cycle. Nothing has scared me for years in oil until a couple weeks ago. Oil headlines are dominated by the coronavirus. every freaking day. Every freaking day.
Well, Mark, China's the #1 importer of oil, especially from Saudi Arabia. And if their economy's, is as badly damaged as we kind of assume it is, because obviously we don't trust the data, their oil consumption has to go down.
Yeah. So, yeah, it's not even a question of oil traders are basically, the debate isn't how high can oil go. It's all a debate. Is it 25? Is it 35? Is it 45? Is it 50? It's this downward debate of what is the range where oil could settle. And that is not considering a global pandemic or the virus spreading. This is with existing coronavirus spread numbers as they are.
That's based on what we know today.
Yeah, no, this isn't like doomsday global pandemic level.
No. That's what we're seeing today in the numbers.
This is just like, yeah, this is going to be a big hit. So I just have to, I'm sorry, like, my little black gold here, like, I guess deep out of the money future things that some traders do as a normal thing. For the first time in 4 or 5 years, I think there's risk there.
I do too.
I think there's risk there. And it's just, it goes down to a philosophy. That the market will be there forever. When there are theoretical risks, why take them?
I agree.
So you can add a couple of percentage points to your overall rate of return at the end of the year. Like, that to me just seems greedy. And like, it just seems greedy. And just so I can make 17%.
Mark, and I know, just in talking to you as much as we do and all the content we put out there, obviously I've known you guys have been changing your thesis from, acquisition of USO when crude oil's at 50 and, start liquidating when it gets into the $60 to $70 range.
That's been thesis for
that's been the
forever.
Thesis. And, that thesis is based on, how US companies behave, energy companies around 50 and how, Russia and OPEC countries, behave around 70. But this coronavirus and the expansion of it is concerning to me. But Mark, you've seen this across the board. Even OPEC last year came out and said oil consumption is going to decrease. I can't remember exactly what the data was, but it was quite alarming over the next 10 years. Larry Fink comes out last month, gives out his newsletter, and he talks about how, he's kind of shifting BlackRock from, those fossil fuels to clean tech and clean energy and so on and so forth over the next 10 years. You're seeing it across the board with Wall Street institutions doing the exact same thing. Energy has been the worst performing sector for years now. And now on top of that, you have all of this happening with the IEA coming out and almost every other agency coming out and lowering projections on global demand from a consumption daily. That's got to be extremely concerning for the oil investors and the oil traders. And I do
this
believe
is
that
3 weeks into the coronavirus.
No,
this isn't 3 months. This isn't 3 years. These agencies are making drastic cuts. Goldman cut their price forecast on Brent from to 50, the low 50s today. Like,
well, that puts crude oil's in about 45, right?
I mean, this is not 3 months or 3 years or a prolonged. This is, oh crap. Like, and once again, if it impacts, what sector has the most sales to China out of any sector? The tech sector.
It's tech.
The equity market's insane today. It is absolutely insane. It is. Well, now computers actually don't have feelings, so it's just.
But consumer America is insane about the market right now, right? Just buy everything. Obviously, that's not our message. We want to make sure our team is fully prepared for whatever happens in the market. But I do think what we've been seeing in crude over the last 3-4 weeks is a better reflection of the actual perception of risk that this virus has than what the S&P 500 is doing. And that's not even me getting into the Fed announcing that they're going to start curtailing their repo actions starting this month and possibly ending those repo actions in April. So we'll be here to get you guys up to speed on that as well. I do want to shift it to the dollar, and I'll just kind of take this one fairly quickly, guys. The dollar is now at a 4-month high. We're quickly approaching 99.50, which would be a resistance level. That is not the all-time high on the dollar index. That is about 103. Obviously, the dollar being a safe haven asset, obviously with more risk to the Asian countries in China and Japan and Thailand and, even in Australia, New Zealand, obviously because they're just simply a little closer to the center of all of this. The dollar is going to rise in value in that capacity. The trade I've been talking about, and I haven't been here the last couple of days, is that breakdown out of that 109 level on the euro dollar cross pair. And that did break down out of that level. And when you look at this euro dollar cross pair on a weekly chart, once you broke that level, there's no real support until you get to about 108. That's about 42 pips away. And then if you can get underneath 108, you're talking 106 by 105. So keep an eye on those currencies that have a risk, specifically in the Asian areas, well, from a corona perspective, but the dollar's just reigning king, queen, reigning supreme right now. And I don't see that changing anytime soon. So obviously we're going to be bumping up the dollar in our scouting report later on today. I guarantee we'll be bumping up the dollar. It is a little overextended. I don't know if there's a new trade on the dollar. Maybe you let it set up a little bit more. I do want to come back to the stock market very quickly. And I want to talk about some individual news in the stock market. We had 3 fairly important earnings reports here today, and I want to get Coach Frank's take on NVIDIA here. Let me give you the data, Frank. NVIDIA and semiconductors have been extremely strong. Obviously, when you're looking at the SOX index, the SOX index is threatening a breakout here today. But NVIDIA reported earnings, and their numbers specifically are, they came in at $1.89 EPS versus $1.66 on the actual number, the expectation. Revenue came in slightly above the expectation at 3.1 billion versus the expectation of 3 billion. But what was really kind of impressive is revenue increased year over year by 40.8%. Obviously, we're breaking out of a trend here, Frank. When you're looking at a gap, Frank, how do you go about assessing what type of gap this is, and how does the intraday action after the gap impact your analysis?
Good question. The first thing I'm always hoping for is it to be at a really sensible place. Like we saw it on Amazon where it kind of was knocking on resistance. We're seeing it here on NVIDIA. So I kind of want to, get a gauge. If we're challenging a major support or, resistance in the case that we've gapped up level, it's always an interesting battle as far as I'm concerned. The close of the candle is going to be important, as is the high, particularly the high. If it breaks today's low, that's not going to be a big concern to me. I wouldn't be bearish, just wouldn't buy there. What I always like to see, post an earnings gap, is I like to see a little bit of a consolidation. I need to find a better way to say it. I don't care if it's 2 days or 2 weeks, but I want to see it do a little consolidation and then break that top. So as opposed to try to maybe get in on an intraday pullback, which I understand it's just not my style, I actually want to play it as a breakout of that intraday resistance. I want to see that follow through. If it can't get there, well, how much further is it going up, right? If we can't break through that resistance. If there's a lot of, if we kind of, open and close, open high and close low, obviously that's not the strongest sign. But for me, the biggest piece of data is the high of that gapping candle. That's always the biggest
and I think
piece.
that's an important point, Frank, because the gap range kind of shows you what the investors think, right?
Right.
The traders tell you what they think on the intraday, right? And when the traders kind of start locking in profit for whatever reason, right? The gift of the trading gods, they see a technical situation, it's overextended, whatever the reason is, they're locking in profit. They're locking in profit from that intraday perspective. And so when you see the gap out and then it kind of starts fading back down, that always leads me to be a little cautious. And I agree with you, Frank. You wait for a pure technical setup, because the only way you can play this off the gap range like this is either one, you be patient and you wait for, the consolidation that you talk about, or you wait for the pullback that kind of fills that gap and closes that gap range back down to 270, or you play it bar by bar. And the momentum bar by bar is basically an order above the high of the day with the stop loss right underneath the gap range. And you just play the momentum. But because you have an intraday pullback, you don't have that momentum right now, correct?
Correct. Absolutely.
So that kind of just leads you to, and all of this is just kind of reading the tea leaves to a certain extent, but you have to try to get that analysis in. And so I just kind of think you just wait with that. You just wait to a little better setup. Obviously you had a really good earnings report. Don't chase the dragon. Wait for the technical setup to set up.
Will you hit just to build off that really quick, Maddie? Will you go to Amazon really quick? We saw something similar happen on Amazon's earnings, and so being patient can pay off, for sure, where we gapped up on a good solid report. Just wasn't happening that day, right? Nothing really wrong, but like Maddie says, you wake up that morning and, oh, wait, I'm up $100, Don't have to talk me into why you're taking your profits. It only took a few days before we broke through that high. And then, we really get that burst. So it doesn't necessarily have to be 3 months from now. It can be,
I think it's a week to 2 weeks and let it set up.
So I think you'd be ready for that. But I personally think you can, I'm just looking for the high base in the shorter term time frame. So it's definitely, you want the momentum. I think at the end of the day, however you play it, when you see that day, sure, we should have just bought Amazon in hindsight that day, right? But
everybody wishes they would go back the day before an earnings blowout and buy the stock. Right?
Exactly. So we're not playing the high say, but by getting that momentum, we're always getting a push, and that's what we're always looking for, in my opinion.
The reality, you guys, is trading's hard. It is. It's easy to go back in time and say, oh man, that was a great technical setup. That was amazing. That was such a good opportunity. But nobody's buying Amazon the day before earnings. Come on, what are we doing?
Not me. I wish I was.
This one case, I'll tell you, the worst game I hate seeing played in the financial world is if you would have bought Amazon in 1998, and if you only would have put $1,000 into Amazon, you'd be worth $2.5 million today. And I'm like, first of all, it's an online bookstore that nobody cared about. It was a penny stock. And literally, what are we doing? Nobody did that.
So, but it is true.
The math is true, but nobody did it. Nobody besides Bezos did it.
Right? That's a fun game to play. I always enjoy the pre-earnings. Oh, this is going to have a great report. I'm going to buy it stories, or it's going to miss earnings and you should go bearish. I'm thinking, man, something I don't, then you've got something figured out.
Information that I don't possess. Moving on to Roku right now. Ilka, Roku, this is exactly what you want to see on a nice little iron condor. Pop up, close the push spread, fade right back down, close the call spread. So great trade on that.
Absolutely.
Trading gods with that intraday pullback. But let me give you the numbers real quick. Roku was expected to lose 14 cents a share. It came in at a negative 13 cents per share. They had revenues of 411 million, which beat the expectation of 392. Revenue, and this what was really kind of led to the pop initially from Roku. Obviously, I don't know the last time I saw a bigger bearish engulfing candle. I don't know if I've seen one recently.
That's big.
It's a massive one. But revenue, guys, whopping 49% year over year increase in revenue. Obviously, growth stocks have growth risk here. Roku, how do you even read this gap? Or is this just a massive stay away at this point?
This is, you got to let time pass, whereas you can always play the bar by bar momentum on a gap up. On something like this, it's just going to need some price development. Honestly, whether you're looking at it from a bullish or a bearish point of view, in my opinion.
Well, I think it shakes out every trader. Are you kidding me?
Usually go ahead, Mark.
If you look at Roku, one thing that I noticed, because stocks have different personalities, Roku is an amazing day trading stock. Look at those candles. The lack of wicks or big wicks on Roku candles is very telling of the stock's personality. I mean, look at how few wicks there are compared to other stocks. Day trading momentum on Roku is a real thing. And you do not get out of the way of the day trading momentum that day. I mean, just the lack of wicks on Roku is actually really, really telling about this stock's personality.
Well, and honestly, Mark, you know, that candle is absolutely massive today, but Roku has had those massive candles without earnings reports, right?
Oh yeah, no, Roku don't need earnings
Well,
to have a
and
big news
honestly,
day.
when you look at the close of yesterday, and again, the candle's massive today, but when you look at the close of yesterday compared to what the current price is, it's actually in line with its ATR, guys.
I
Roku
mean,
moves about 5.3%, 5.4% a day,
which
and
is
right
why
now,
day traders love it.
5.4% on the number.
Because the day trader, in fact, I think I might just quit tackle trade and go day trade Roku.
Just go day trade. Well, I do think that's an important point to make, though. Don't try to force your will on a stock that doesn't fit that personality, right? I mean, if you're a swing trader, this really hasn't been a great swing trading stock for 6 months, right? If you're an investor, you're not even looking at it, you're just kind of closing your eyes and saying, I'm holding for the next 10 years. And so understanding kind of what works on a stock, I do believe is important. Expedia here was the last earnings report that I really kind of wanted to talk about. Don't really see any type of trade. Maybe you put it on a watch list. Just want to give the numbers. $1.24 on the earnings per share versus the expectation of $1.19. 2.7 on the revenue billion versus 2.8 billion on the expectation. So a slight miss on revenue. Year over year increase in revenue by only 7.8%. Obviously market gaps up, but the concern here, if you're the investor, is it gapped right into the 200-day moving average? Is that a concern? I believe neither one of you are investors in Expedia, but if you were an investor in Expedia, would that concern you at all? Would you be looking to be like, okay, their last earnings report blew me out of the water, maybe take the gift of the gods and just move on to something new?
Yeah, I mean, I'd be thankful if I were. I'm not, but if I were, I would be thankful. It's still, I don't have a lot of fun things to say about Expedia. Technically, you've got the
Find me a
200
trade that you could do on Expedia.
Yeah, I mean, there was a weekly retracement that was developed, but of course, this gap up's going to tear that one completely apart. So, this is, I guess, something that if you believe in Expedia as a long-term investor, if you held through the last one, why not hold through this one, right? I guess it would be my philosophy. If you're trying to trade this thing, good luck to you. It doesn't have a great trader's personality, kind of building off of that. I think this is one of those. I wouldn't even put it on a watch list, but again, that doesn't make me right.
I don't see any reason to, not from any time frame, to trade this company or to invest in this company. And that's why even before we started talking, I'm like, I'm not even going to do the analysis here. I just want to ask one question.
just smack in the middle of nowhere, but there's a green line.
Exactly. I do want to give a couple economic data points that we saw here today. Consumer confidence has been a storyline that we've been seeing play out for years now, and we're seeing the continuation of it. We've talked about one of the reasons why this market is so strong and has been so strong for the last few years is you've had two really kind of competing theories. Number one, the Fed massive switch at late 18, early 19 about going from, rising interest rate environment to a lowering of the interest rate environment, pumping in, increasing the balance sheet. That's number one. But consumers have been euphoric here. We've seen consumer confidence numbers hit record highs, both in the University of Michigan consumer confidence numbers, as well as the other consumer confidence report, the CB consumer confidence report we get on a monthly basis as well. It came in above the expectation. 99.5 was the expectation. It did come in at 100.9. So just the continuation of that consumer confidence really kind of, just building in some of the momentum there. Also, in conjunction with that, and I'll open up, see if Mark and Frank have any take on this. Retail sales numbers came in line at 0.3% increase versus the expectation of 0.3. And if you read the kind of the story behind the retail sales and the consumer confidence, it both leads to the exact same things. Consumers are euphoric right now. Mark, what's your take?
I don't pay attention to economic data anymore because nobody else does.
Am I the last one?
You are the last.
Am I the last one?
I care what's the Fed doing, and is there a big, huge storyline? Like, I used to really love that stuff. I really did. And then I realized good news can be bad news, but sometimes good news is good news, and bad news can be good news, but sometimes bad news is bad news, and trying to put any rhyme or reason to why the market.
And all of it has to do with what the Fed's going to do with the interest rates.
That's all that matters.
Right.
Like, I mean, so like.
I agree. I don't disagree. I do believe that because we've lived through the years of good news is bad news and bad news is good news, right? We've lived through those years. And it's extremely frustrating because of what the Fed has done to kind of eliminate the free marketplace that we all cherish and love that no longer exists.
I mean,
so,
this is how amazing it is. You can have an economic report come out and it can be bad, and the market can go up because they'll say, well, the Fed's going to do something about that.
yeah.
And then you'll have an economic report that will be good, and they'll say, oh, good, economy's doing good. There's no rhyme or reason to how the market reacts to economic reports.
Well, just think about the trade war. How many times do we see, good news happen on the trade war, market comes up, negative news on the trade war happens, and market goes up, right?
I know, no,
Yeah.
it literally, like, the market.
So I get it. I get it. But I will say, for years and years, my number one shoe I've wore since I was in like the mid 90s was the Adidas Superstar 2. And at some point they eliminated the Adidas Superstar 2. And my kid's like, you're so old, you're so old, you're so old. I'm like, no, I'm retro, I'm bringing it back. And about 5 years ago, they brought it back. So I'm still going to be the holdover that says economics do matter. At some point, GDP is going to matter.
Okay, Grandpa.
Consumer confidence is going to matter. So
this halftime report brought to you by Grandpa Justice.
I still have to have it. Tesla, another stock in the news very quickly. And guys, we're going to be getting done here in just a little bit. So just stay with us for one more second. Tesla stock offering 2 billion shares. You guys might have talked about this yesterday while I was not here.
Listen, I was in charge of the show. Do you think I talked Tesla when I was in charge of the show? Actually,
no.
I think we might have actually.
Okay.
It's hard to ignore Tesla. Like, it's such a fascinating chart.
Well, okay.
In fact,
we get like this though. Okay. We have, and Tesla, there was some negativity about Tesla offering these shares at 767, which was still a discount of like 4% versus what the current price was when they made the stock offering. We've had some negative things to say about stock buyback programs over the last 10 years, correct? Okay.
Well,
especially with like Boeing.
Yes.
Right. Okay. So I don't think we should be negative when Tesla offers shares instead of just buys them back. I think that's my point.
Yeah, I would agree with that.
Companies offering new shares dilutes the value to existing shareholders, and for me is a huge red flag. But you know who doesn't care about that? Anybody else. So,
well, Elon, it was announced that Larry, who was it? I can't remember his name, but he bought like 1 million shares. Not 1 million shares, $1 million worth. I believe Elon bought $10 million worth. And so I get your point, Mark, and I don't disagree with it. I'm just saying, you can't have it both ways. You can't say, you can't rail on Boeing for $10 billion worth of stock buyback programs instead of building a safe plane, and then say offering shares is also negative.
Oh, if a company can get away with it and have it not affect their share price, every company should do that. Well, I mean, why companies buy back shares is because it can positively impact their numbers. Right? So their EPS goes up, making the same amount of money. That's why companies buy back shares. Mm-hmm. Tesla's like, listen, Grandpa, your rules don't apply to us because nobody
cares. I'm not the only
even...
Grandpa here. You're the Grandpa too.
Yes. Like,
I see it.
Because if a company can get away with it and do it and nobody care, every company should do it because it raises more capital for that company.
Yeah, but not every company is Tesla with the fanboys of Tesla and the following of Elon Musk. And
not everybody has cult members ready to drink Kool-Aid, but Tesla does.
Tesla does. I want to get Frank's take on this, Frank. We're seeing something form on Tesla that we have not seen in kind of this parabolic uptrend. We haven't really seen, technical analysis take hold here, right? I mean, it's just
been up,
right? But we are starting to see a little bit of consolidation. Riding the 9 EMA has been a profitable venture for Tesla traders over the course of the last couple of months. But I'm getting interested here, Frank. Talk me into it, talk me out of it. But I'm seeing a nice little intraday type resistance form over the course of the last week that really in that kind of, let me give you an exact number here, kind of in that 813 to 1820 area, Could you be convinced that some type of conservative trade, maybe a credit spread underneath, or maybe a bull call spread above, but could you be convinced of some type of more conservative trade if we do see a breakout from the intraday perspective?
Well, number one, that's definitely a break, and a tradable break at that, in my opinion, if we get it. Number two, I would argue that playing a little more aggressive strategy would make more sense. If that breakout fails, I would, I'd worry about my out of the money.
Frankie, I was showing how courageous I was being.
Well, and I generally agree with your philosophy. I'm a giant wimp, you know that. But in momentum type of cases, if I'm thinking about Tesla, thinking about playing into it, I want some of that pop that I've been missing out on, right? Or if I'm lucky or smart,
we should do what everybody else is doing that's made a mint on Tesla in the last 2 months, buy out of the money calls.
I would probably buy like 10 shares. So that's probably how I play it. But it is really interesting because we're going to get a pretty respectable risk to reward profile. Basically with the way it looks right now, stop below today's candle would make sense to me. We don't have a lot, if we can get through that until that top resistance level. So our risk to reward would actually make a little bit of sense. I actually have this on my list to talk with you coaches here today in the scouting report meeting. It's caught my eye there.
Now it may or may not pass because
I think it'll fail.
we might see the trigger and we might see the opportunity, but we also know that there's people in our community that are not to the level yet of trading a company.
Noah and I talked about this exact setup yesterday. We both gave it the green light. So
yeah, I'm getting
nice technical setup. It's a nice technical setup.
And especially with today's action, it's going to give us a risk.
Oh, today's action only made it a better setup.
Yesterday was going to be tough on a stop, but today, at least as of right now, I think we can get a favorable risk to reward.
I agree. I think a stop underneath the low of today, that's a nice little intraday support level. If you break it down on the 30-minute chart and order above that breakout channel, I think you got cheap risk for a potential return here. We'll see how it plays out though, but we'll talk about it definitely in the scouting report meeting. Last stock, and then I'm going to turn it over to Breakout Frank for a second. Facebook comes out with some news here today, guys. Facebook launched a new app that it's not in the United States. I think they're just testing it in certain countries around the world, but Facebook comes out with a new app called Hobby. Now, Hobby is released in limited exposure, but Hobby is basically Pinterest, right? And we've been excited about old Pinterest for a long time. We're starting to see a reversal pattern happen on Pinterest. Pinterest taking on the chin a little bit on the news. Facebook's down a little bit on the news. With Facebook launching something that is obviously a direct, competitor to another company, would that give you a little bit of hesitation with Pinterest if you're looking at it?
No, no, at least not yet. Until some things start to shake out, I wouldn't let it bother me one bit personally.
Yeah, and that's kind of where I was at. It's like there's enough space for people to go and get ideas for food.
Exactly. I need more things to click on the internet, not less, right?
So, is that the problem we have?
That is the problem.
More on the internet. Breakout Frank, we're getting ready. After we get done here in the next couple of minutes, we're going to be getting ready for our scouting report meeting later on today. And for those of you who are new to tackle trading, we put out our stock and options and commodity and Forex report on a weekly basis on Saturdays. And what all the bird dogs coaches of tackle do is we go out there and we scan and we find good technical setups and we put these reports together. And Frank, you're going to go through your process, but you got some stocks that you're looking at right now that I want to share with the halftime crew. First and foremost, Frankie, give me some of the stocks that you're looking at right now as potential trades coming into those reports.
All right. Well, always fun. Yeah, I always start early on Fridays. I always I'm up with the up bright and early because it's my favorite day. I love scouting report meeting day. The one thing that I wanted to look at with the halftime crew today is HSIC, and we're gonna have to go to a weekly chart, and we're gonna have to be patient because we have earnings coming up, and so it's gonna make it. It won't be on the reports. It can't be on the reports. I don't hold directional trades to earnings, just like you don't hold directional trades during earnings, but we are dealing with a major overhead level of resistance. As you can see, you could even go back a little further if you would like to do so. That's a big deal, guys. That is a major price point. And to break above that is going to be very difficult. Now we have an earnings announcement that's coming up that might completely destroy this pattern, right? so it might be much ado about nothing, but it also could be a positive report. This is for me, a watchlist candidate. Can't prep a trade right now, but anytime I'm looking at something with that much overhead resistance, if you don't think I saw that and a big smile cross my
But
face,
you got excited.
you don't know
got
me,
excited.
right?
And again, it's just a matter of being prepared, right? You're not going to chase it coming into an earnings report at the top end of a channel that's been very consistent for 3 consecutive years, right?
Right,
But
exactly.
if you do get a positive report and we do see the breakout of 73.5 with some momentum behind it, that could be something that we might want to look at. I mean, it was just a few years ago where you were seeing a trend like that.
Exactly. So we basically went into this long-term sideways range, and it's tough. Everybody knows it. Everybody knows that's the top of this price range, right? So to get more money to come in and say, yeah, this is where I'm buying. Well, none of us here, no one in the halftime crew would be doing that, right? So it's going to take a lot of money to get us through that. We'll see how the earnings impact that, but definitely worth keeping an eye out for. We've got on the other side, CHRW. No earnings on these guys to worry about. Actually, earnings have caused them a huge amount of stress recently. Big gap to the downside, have established a nice little floor over the last couple of weeks post earnings. Not a lot of support below that for a ways, as you can see looking at that longer term chart. That floor gives out, well, I'm interested from a bearish point of view. I think that's a very interesting bearish breakdown candidate personally. For me, we've got CarMax, KMX, another breakout candidate, just kind of knocking on the door.
Especially at $100, those breakouts are legit.
It's nice, and I love that it's been, because I had it, on in my personal watch list, last week. Very happy that it didn't do anything this week, because I didn't, I want that consolidation break, just like Matt does. I'm a little more open to the momentum break than Matty is, but I want the same things he does. So that's for sure. So another interesting character. We've got some interesting things too over in the home builders. If you look at LEN, we'll look at LEN first here. So you got a little bit of a pullback here on LEN,
nice flag pattern, by the way.
Nice little flag. You could talk me into upward momentum on Monday morning with the way that chart is looking.
Is there any way I can talk you into a breakout of a 30-minute trend line on a flag-based pattern coming into the weekend, though?
No, but that's just because that's a me thing. If Mark took this trade,
that's a confirmation signal, though.
Oh, absolutely. I wouldn't fault anybody for taking that trade.
We're just a little cowardly coming into the weekends.
I've always been that way for whatever. It's a mental thing, I think, more than anything. I'm fine to hold through the weekend. Just
think about it. Day traders were created in Wall Street because they didn't want to carry overnight.
Yeah.
Right? They wouldn't even carry overnight. So when you're talking about carrying over a weekend, obviously you got a lot more time. You have a whole bunch of economic systems happening in Sunday, Monday morning before the U.S. markets even open up. I like that flag-based pattern on Lennar, no doubt about that.
So if we compare
you're also talking about Polta here.
Exactly. I was just going to bring him up. You read my mind. So if we're not liking the pullback, or if the risk to reward's not there, we've got a little consolidation high base break on PHM here. So a little bit of interesting things going on over in the home builders as of right now. Definitely an area worth keeping an eye out for. Let's see, anybody else super interesting? I know I brought up UAA to you. Another gap. We got high base on Allstate. So I want to look at two more, Allstate and Under Armour, if you would.
Okay.
Allstate, we've got ourselves a nice little high base, right? Big, nice pop, positive response on the earnings side of things. Have done a whole lot of nothing for a week and a half. Really liking that as a high base breakout candidate personally. I don't know what your takes are on, but I'll be bringing that.
I love clean triggers is what I love, right? And when you got a stock that, obviously had a positive response to our earnings, this is kind of what we were talking about, Frank, earlier, is kind of wait for that to set up, wait for the consolidation. And what I've talked about with clean triggers is when you break it down from an intraday and you have this clean trigger right there where you don't have, like these nasty wicks that every now and then will blow out.
Yep.
Right. It'll test up, fake right back down. I like clean triggers. I could definitely get signed up for Allstate. And then the last one you had, Coach Frank, was Under Armour, who basically, like, honestly, and I'm not being sarcastic here or negative, Why would anybody invest in Under Armour when you could buy Nike?
Well, based off of the response to their earnings, most people tend to agree with you on that side of things.
And that's why I made the comment, is because their earnings and their reporting numbers are atrocious.
Well, yeah, and sometimes you look at an earnings gap and you're like, well, that doesn't make sense. They didn't deserve it. This one, you know, I kind of did, and I was like, yeah, that makes sense. They did deserve it. Yeah. So, but hanging by a thread, consolidating for a little bit, giving us a little bit of development.
Well, there's no support underneath that.
No, we're talking about, you know, a pretty decent long-term level of support that we're going to have to give out on top of that floor.
And again,
with that negative
a clean
news.
Trigger under 15. You know,
yeah, that's clean.
Yeah, and that's what, and Matt's right. I mean, that's what we always want. Sometimes, you know, I want to, you know, do a trade on something, but if it's hard to get an entry,
dirty wicks are hard
to get a stop. I mean, move on. There's plenty of other things. I'd be remiss. Fortino put in SPGI. This was in the stock report. I think it was in the stock report this week. Triggered here a couple days ago. Nice follow through here today. Nice little breakout going on over there as well.
Yeah, I love it, guys. And that's just a little bit of a preview of what we do in our scatter reports. And, you know, obviously everybody, let's say great job, Coach Frank, bringing ideas and bringing out his breakout charts for all of us to really enjoy. And if you
I was taking notes.
Hey, listen, there's a couple.
I was taking notes.
Absolutely.
Did you hear me talk in the last 7 minutes? I had my pen out and I was
shocking.
Well, listen, I like money more than my own voice.
I agree. That's good. So let me close up the show. Okay. So in terms of this, guys, if you do enjoy tackle trading, you enjoy what we put out there in the halftime report on a daily basis, go ahead and give us a like and share. And Tackles, we're just a small little shop here that does what we do for our community. And if you enjoy what we do for our community and you've got value at it, tell a friend, spread the word of tackle trading. And with that, guys, we are out. We're going to go get ready for the scatter report. So if you're a pro member, make sure you're watching those scatter reports to prepare for the market on a weekly basis. Make sure you're watching the newsletter. And if you're not a pro member, you can always get a free trial to see what we do for our pro member community by going to tackletrading.com, or you can email Coach Mark at team@tackletrading.com. Team@tackletrading.com as well. Coach Mark, great analysis. Coach Frank, great analysis. Thank you so much for your time on the halftime report today. And with that said, we are out.
Have a great weekend, halftime crew.